Hey traders, I'm Melly from FX Scouts. So if you've ever felt lost in the middle of a trading day, not knowing whether to chase a move or whether to sit on your hands, then this video is for you. Today I'm going to be breaking down a powerful tool that most professional traders use on a daily basis, the VWAP. By the end of this video, you'll understand how to use the VWAP to find high probability trades, whether you're trend trading, mean reversion trading, or just looking to find out what market sentiment is telling you. So stay tuned. Remember that forex trading is risky and that most traders lose money. This video is for educational purposes only. So let's get into it. VWAP stands for volume weighted average price, and it's not just another moving average. It's where the most volume is traded during the trading day. This is what makes it highly significant. Institutions, prop firms, and algorithms benchmark their execution performance based on the VWAP. So if the price is trading above VWAP and holding, it suggests aggressive buying and institutional support. VWAP resets every single day and it is cumulative. It starts at the open and builds as the day progresses. That gives us a true picture of where the average trader is positioned. Unlike EMAs and SMAs or exponential moving averages and simple moving averages, it responds not just to price but volume as well, and that's what makes it so significant. It's what many traders anchor to, and knowing where the VWAP is the battleground for price. Are we above value? Are we below value? Or are we reverting around the VWAP? One of the most reliable ways to use the VWAP is as a trend confirmation and alignment tool. When price breaks above the VWAP early in the session and stays above it, that signals institutional interest on the buy side and confirms bullish sentiment. VWAP then becomes your anchor, your dynamic benchmark for trend health. So here's what to look for. 1, a strong impulsive move away from VWAP that creates space between the price and the line. 2, follow through price action where higher lows develop above the VWAP. And then a rising slope on the VWAP line itself, which tells us that weighted average volume is shifting upward with price. These signs together tell a story that the buyers are in control and that the price is rising. And what happens then is VWAP becomes your moving support, and it is respected during pullbacks. When price drives back to the VWAP after that initial drive, it often bounces off it. This is sometimes referred to by traders like Mark Holstead as the first kiss of the VWAP. You want to think of it like a moving average pullback trade, but stronger because VWAP is volume weighted. And again, this is a very important distinction between a VWAP and an EMA. It reflects where the majority of market participants are positioned. And that first interaction after the trend has moved away from the VWAP and comes back and kisses it is a very high probability entry. However, it's very important not to treat it as an automatic trigger. You want to see a few things line up before you take your trade. So number 1, the bounce forms quickly with a reaction candle, e.g. a bullish engulfing or strong-bodied close, a return of volume to confirm the reaction, and then obviously continuation in the same direction thereafter. What I often find though is price often moves beyond the VWAP and then turns around to go in your original direction. So you actually have to sit and watch the VWAP for a while before you confirm your entry. As a rule of thumb, the more time price spends above the VWAP or below the VWAP without touching it, the more powerful the move is when the first kiss does eventually come. But be cautious on the second or third touches. VWAP starts to lose its influence as time goes on. And what you also may notice is that price is moving into more range-bound activity at that point. I've mainly been showing you bullish VWAP strategies, but obviously the same applies in a bearish market. So if price is below a downward sloping VWAP and reacts bearishly on a touch, that confirms bearish control. Again, you need to look at the slope because flat VWAPs often suggest range-bound price action. Now I want to talk about a slightly different type of VWAP environment. I want to look at how to trade with the VWAP on range-bound days. These are sessions where the market is lacking clear directional bias. You'll find that volume is dispersed, volatility is subdued, and price action is choppy. And on these days, you'll find that VWAP behaves quite differently. So instead of serving as a trend anchor, VWAP is actually acting as a magnet for price. Price repeatedly reverts back to it after short bursts away. And this is where the VWAP Magnet play comes into effect. So here's how to identify it and to trade it. Number 1, you'll look for a flat or nearly flat VWAP line. Number 2, price action should be oscillating on both sides of VWAP with no sustained breakouts. And then the day should show signs of balance, no strong economic news, low directional conviction, or overlapping opens and closes. And once that context is in place, your goal is to fade moves that move far away from the VWAP, anticipating a snapback. These moves are ideal for mean reversion traders and scalpers. Here are the steps for execution. Number 1, measure the typical distance that price extends from the VWAP before reverting, e.g. look for zones of prior reversals. Number 2, you'll wait for price to reach those outer edges and slow down. And number 3, look for confirmation like a reversal candlestick pattern, e.g. a pin bar, engulfing candle, and also a drop in momentum. You'll enter with a target back to the VWAP and place your stop just beyond the recent swing high or low. So it's quite a simple setup, but you do need to ensure that it is indeed a mean reversion day. So here are a few key tips with trading mean reversions. Number 1, avoid trading the setup during high impact news events. Obviously, VWAP could break decisively in one direction. Number 2, use small position sizes. The R multiple is usually smaller than on trending days. And number 3, don't chase. Wait for the price to overextend and then fade it with patience. This type of trading doesn't often yield huge winners, but if executed properly, it has quite a high win rate. It's all about exploiting intraday equilibrium and mean reversion tendencies. Next, I want to get into the anchored VWAP. So it is a powerful adaptation of the standard VWAP that lets you measure sentiment from a specific line. So instead of starting at the open, you anchor VWAP to a specific event. For example, an earnings release, an FOMC meeting, a major breakout candle, or even the start of the month or the quarter. And this answers a critical question. Who is in control, the buyers or the sellers? And here's how to apply it. Number 1, choose a major event or structural shift on the chart. Number 2, apply anchored VWAP from the candle's open. And then number 3, watch how price behaves around that anchored level over time. And of course, it works better if it's used in confluence. So number 1, if anchored VWAP lines with price support, that's a strong level. And if price reclaims anchored VWAP after a period below, it often sparks continuation. And for swing traders, for example, anchored VWAP may be from the monthly open or from recent earnings reports. And these can be a core compass for bias. And for day traders, anchoring the VWAP to the first 5 minutes of a session open could be a trade idea and could show you whether the market is in a trend or mean reverting. This is a sentiment gauge rooted in time and volume. And it's one of the cleanest ways to track institutional positioning through evolving market phases. So let's wrap up with a quick summary. Number 1, VWAP is not just a moving average. It shows where value is being agreed on. Number 2, use standard VWAP for intraday trend confirmation and mean reversion. Number 3, fade price back to VWAP when markets are balanced. Number 4, use anchored VWAP to track sentiment from key events. And number 5, watch for slope, reaction, and volume to validate your setups. In short, VWAP provides structure to the chaos. It doesn't win every time, but it does give you a structured approach to your trading. If you stay patient and allow price to come to the VWAP, not the other way around, then you create an edge. Thank you so much for watching. If you enjoyed this video and you want more content like it, please hit the like button, leave us a comment in the comment section below, and please subscribe to our videos if you haven't already done so. Cheers, and I'll see you in the next video.